Welcome, everybody. This is Dr. Danae Starks here, and we are back. BSBA is back with another informational session for you all today. Today, we are talking about 8 ways to keep good credit. So we've had several credit boot camps. We had part 1, part 2. We've had lots of credit discussions and credit resources. And so today, we just wanted to bring out some information to you all and provide a couple of different tools and resources for you all to connect with that you may or may not know about. So at this time, we're going to go ahead and get started. So 8 ways to keep good credit. So a lot of times what happens is people may have fixed their credit, right? And then they're trying to figure out, okay, what do I do now? Like, how do I handle my money now to where it best benefits me, to where I don't fall back into that poor credit situation or the bad credit situation or have too much debt or whatever the circumstances are. So today we're going to talk about that, and we're going to talk about how to manage it effectively so that you don't fall into those circumstances. So what we'll do is we are going to go to point number 1. So the first thing is manage your finances wisely and use common sense, right? So when we're talking about maintaining good credit, keeping good credit, building good credit, and things like that, we don't want to necessarily put ourselves in circumstances or in financial situations where we are going to create more debt that is going to harm us again in the future, right? And so a lot of times we don't know what to do. Today we're excited because we have a guest with us today, and this is Marcia McClain, and she is with us from the Financial Empowerment Center. Hey, Marcia.
Hi.
We were just going on. Can you turn your volume up a little bit? Or maybe it's mine. There we go. Yep, good to go. So we're just talking about 8 ways to keep good credit. Today, if you want to introduce yourself, that would be good. We can take a couple of minutes and do that now. We just got to the first point of managing finances wisely and just using common sense. So after your introduction, we'll go into a discussion about that.
Okay. Hi, my name is Marcia McClain. I am a financial coach with the City of Sacramento Financial Empowerment Center. I have been doing credit counseling for about 15 years now. I did it for about 10 to 12 years in the nonprofit industry, working with a lot of different programs in the Sacramento area. And then now I am happy to be giving my services to the City of Sacramento Financial Empowerment Center. And thank you for having me.
Thank you for joining us today. It is awesome. We've had a couple of different credit boot camp webinars and just helping people with their credit on a personal level. Right now, we know that COVID hit everybody really hard. And so people have worked really hard in gaining the education and the tools to be able to reverse that negative debt or the negative credit and things like that. So today we're just talking about 8 ways to keep good credit. So point number 1 is just managing your finances wisely and using common sense. So what tips can you share about point number 1 to help us manage wisely?
I would say first, be educated, especially when it comes to credit. I always say you have to kind of know what's on your credit. I experience a lot of clients who really don't know what's on their credit. They're kind of guessing. When they apply for credit, they're kind of surprised by what they might see and don't necessarily understand what is actually on the credit and what it means. So even if that means connecting with an expert or someone that can help you understand what is on your credit, what your finances look like, what your baseline budget looks like, what you're working with, kind of just be educated. And then when it comes to using common sense, I just say nowadays, if it sounds too good to be true, it probably is. In this new world of internet and all kinds of stuff, you have to be aware of different scams and things going on. You want to be aware of what your bank, the types of messages your bank may and may not send you, so that you're not responding to things that might be fraudulent or might be scams and things like that that are designed to take your money. Yeah.
Yeah, there were a few scams out there, even with some of the small business funding programs that were made available. And so it's definitely important to know where the communication is coming from, to prevent being scammed or falling into some sort of a trap. So thank you for that. The next one is about paying your bills on time. How important is this when we're talking about having good credit?
This is the most important factor when it comes to having good credit. 35% of your credit score is based on time payments. So that's the best thing you can do for your credit score is to pay your bills on time. Um, there's a lot of myths out there about how long things stay on your credit report. But in a nutshell, when you're not paying your bills on time, um, particularly when you go into 30 days beyond a payment due date, that's something that's going to stick around with you on your credit for 7 years. And every time you do that, it just kind of restarts that clock of having, adverse information on your credit report and having a detrimental impact on your credit score. So 35 out of 100% of your credit score is paying your bills on time. So that is definitely one of, if not the most important thing you want to start with.
So even after someone has like kind of built their credit back up, that's like one of the top priorities, pay bills on time so that it doesn't
Absolutely.
regress back.
Absolutely.
That is great. That's great. The next one is don't borrow more than you can afford to repay in a reasonable length of time. What would you say is a reasonable length of time? Like, with credit cards or, terms, because every term is different.
Right. So really, when it comes to like a credit card, when it comes to a revolving line of credit, there really is no term. So you'll see on your credit report on a credit card, the term will say something like maybe 1 month or something like that, because the term really depends on how much of a balance you're carrying on that card. Um, so the lower your balance is, the sooner you'll have that revolving card paid off versus the longer your balance is and the amount of the payments. For example, if you're only making minimum payments, it's going to take you a way longer time to pay off a revolving card than if you're putting more, paying more every month than the minimum balance. So on a credit card, there really is no set term. That's kind of why they call it revolving, almost like a revolving door. Um, with installment credit, however, there is a term. So, for example, with a home loan or an auto loan or a personal loan or something like that, um, you'll have a set term, whether it be 3 years or 4 years or 5 years or 15 or 30 years on a home. So, I say it kind of depends on what the purchase is.
Mhm.
For a car, you can, I've seen loans up to 7 years. For a home, you could do 15 or 30 years. So I think any of those is reasonable as long as you kind of understand, what is kind of average for the type of product that you're getting into. Like if you were doing a 30-year car loan, I would say that, that would be reasonable, of course. Um, and then you just kind of want to be educated. A car loses its value more and more every year, so you want to take that into account. If you're getting into a 7-year car loan, what is that car going to even be worth, in 7 years when you're still making payments on it and that kind of thing. So those are some of the things I would recommend that you kind of want to think about when you're thinking about whether or not a term is reasonable or not. And then, of course,
What if,
interest. The longer
oh, yeah.
you extend a term, the more money you're going to be paying for borrowing that money. So it kind of depends on what your tolerance is with that. I like to tell people to do the math on a piece of paper, and look at it. And if that number, the amount of money you're paying just to borrow that money, if it doesn't sit well with you, then that might be something you might want to think twice about or try to get a better term or a better deal.
Now, as a financial expert, do you suggest, or what are your thoughts about, sometimes we purchase things when our credit's not so good, right? And so we have higher interest rates. And then after about 2 years, 3 years of working on it and our credit's in a better space, like, so if we went and bought a car and our interest rate is like 27% when we got it because our credit was so bad, do you think it's wise, or do you think it's a good option to, once you get into a better space credit wise, to refinance and get that interest lower so that you can potentially pay less on that specific type of debt?
Oh, absolutely. Absolutely. I would always, if you get into a position where you can lower, especially something like a 27%, on a car loan, and maybe even get it down to 9 or 10%, I would absolutely say, go for it. Because again, my main point that I try to tell my clients is you don't have to pay interest in order to build your credit. So as long as you're making on time payments, you don't have to be paying a lot of interest on things. That's just the rent that you're paying for the borrowed money. Unfortunately, no one's really just out there just lending us money because they like us. So they're actually making money on that, via the interest. But interest is not necessary to have a good credit score. So if you can avoid, paying extra interest and keep some of that money in your pocket, then by all means.
Now, is there ever a situation where your credit is so good that you still get denied for stuff? Like, maybe a certain bank doesn't want to give you a car loan because there is no interest. Like maybe you qualify for zero interest and zero money down.
Unfortunately, I have seen that. It doesn't happen too often, but I actually have seen that happen before. Depending on the lender that you go to, um, probably some bigger lenders would not do that as much. But like if you were dealing with maybe some smaller lenders, I actually have seen that be the case where, yeah, if they're not going to make any money off of the loan, then they might deny the loan for that reason.
Yeah, that's interesting.
Yeah.
It's almost like you get penalized on one end and penalized on the other,
Yeah.
potentially. So, um, the next one is about not applying for credit cards or for credit, period, too often. How does this impact us, and how can we make it kind of beneficial for us by not applying too often?
So yes, inquiries. So inquiries are about between 10 and 15% of your credit score. So they're not, anywhere near the amount of your on-time payments, but they can affect your credit score. And when we're talking about the difference between, a 640 and a 650, having too many inquiries on your credit report could make a difference in, a few points. Um, Typically lenders don't want to see more than 6 to 8. If you have more than 12 inquiries in a 12-year period, that could be a reason for getting denied credit, just because of that reason. Um, so yeah, you definitely want to keep an eye on your inquiries. I tell people, don't be so quick to let people pull your credit when you're in the store and they offer you, 20% off just for applying for this credit card or that credit card, and you're not going to get it, but it still puts an inquiry on your credit, which could reduce your credit score by a few points. So I try to educate people about that so that they can think about that when they get into those kind of situations and weigh the benefits of that 20% off today on this purchase versus maybe 4 to 6 points on their credit score. Um, so inquiries is one factor when you're talking about not applying for credit too soon. And then secondly, I like to let people know that you can be strategic with your credit. So for example, when you're applying for an auto loan, your credit score is always a snapshot of that point in time when it's actually taken. So you can be strategic about when you go to apply for things, after you've made, your monthly payments this month, or after you've cleared up maybe, something negative on your credit or something like that. You can strategically think about when is my credit gonna look a little better, and then that's when I want to go apply, for some credit when I might be in a better position to actually be approved. So I would look at both of those factors when it comes to not applying for credit too soon.
Can you talk a little bit about those hard inquiries and soft inquiries? We hear those terms, but sometimes they say, oh, it's just a soft inquiry, it won't impact your credit. Is that true?
That is true, 99.9% true. Yes. So a hard inquiry means that you actually applied for some credit. You applied for a credit card, you applied for a car loan. They're checking your credit to make a decision on whether or not to extend you credit. That's going to show up in the regular inquiry section of your credit report. Those are the ones that when you start to have too many, they could start to impact your credit score. There's two other types of inquiries that you would see on your credit report. You have promotional inquiries, and then you have inquiries by people that are, and I'm losing the name of this other category right now for some reason. But the third category are your creditors. So, say for example, you have credit. Anyone you have credit with, or you might have a collections with, they actually can take a sneak peek into your credit at any time. So the promotional inquiries and the category of inquiries for your creditors, those are typically called soft inquiries. Um, However, only they're soft in a sense, whereas promotional inquiries can actually hurt your credit score as well. So I don't know if anyone has ever heard of opting out. There's a
Yes.
website called optoutprescreen.com where you can go in and opt out of receiving like pre-screened offers. So those are those letters you get in the mail, like you've been pre-approved for this credit card or you've been pre-approved for this. If you opt out of those, that will cut down on the impact that the pre-screened offers are having on your credit score. The third category where your creditors are taking a sneak peek into your credit, that doesn't impact your credit score at all.
Okay.
But that is why you may wonder, I've been doing some stuff on my credit. I've been cleaning up some stuff. I may have made a settlement offer with this creditor. Now, all of a sudden, I'm getting calls from all these other creditors. Do they know that something is going on? Do they know I paid off something else? Sometimes the answer is yes. They actually can take a sneak peek. So they don't get a full view of your credit report with all the details as someone who you're applying for credit to, but they can see a sneak peek of some of the activity that might be going on in your credit report and kind of get a glimpse of what might be going on. And that could be why you're getting some of those, I call them zombie debt collectors that are coming out of the woodworks and trying to see what they can get. So for the most part, two out of those three categories can impact your credit score. The promotional offers, if you're getting too many, and the reason for that is because the credit scoring people feel like if you have too many opportunities for credit, the possibility that you could just be overextended at any time exists. So even
Mm.
if you don't, they just kind of get paranoid that you could have the possibility to go out and just do this, I guess, this crazy credit grab, and you know what I mean, and have a lot of credit and be overextended and not necessarily pay it back. So your hard inquiries where you're applying for something and your promotional inquiries, you want to cut down on those. The ones where your creditors are looking, that's not going to impact you at all. And finally, anytime that you pull your own credit report, or someone like me who you're working with, a credit counselor, pulls your credit report, um, that's a soft inquiry. Always double check your counselor. There's a lot of credit cleanup agencies out there who say they're pulling soft inquiries. I've even worked at nonprofit agencies that say they're pulling soft inquiries and they're actually pulling hard inquiries. So you want to
Mm.
make sure you're asking that question and being perfectly clear on who's pulling a hard inquiry and who's pulling a soft inquiry.
Thank you. That was great. Did you say that website was called optoutprescreen.com?
Optoutprescreen.com. Yes.
Okay, because we definitely want to add that. so that our viewers will know about that
Yes.
to
Yes.
opt out so that it doesn't negatively impact you moving forward.
Yes.
Um, and so we'll put that up on the screen a couple of times throughout this discussion so that we can remember to encourage people to opt out or at least look at it as an opting out option.
Exactly.
Number 5, so establishing an emergency savings. How does this help us with regard to not necessarily having to rush to try to find a loan real quick or use all of our credit card, limits and things like that?
Absolutely. And exactly what you just said. So I'll even start with the stress factor. Having an emergency savings will reduce your stress. It's just something that if your car breaks down, the stress that can cause, if your refrigerator goes out or your washer and dryer, those things can be, pretty expensive, big ticket items. And knowing that you have an emergency savings, for things like this, just cuts down on the stress. And again, like you said, it keeps you from maxing out your credit cards, paying a whole lot of interest on things that lose their value after you,
Mhm.
charge them on your credit card, but then you're still paying for them 7, 10, and 11 years later. You're paying way more than the item, is worth or even cost because of the interest. So having an emergency fund can definitely, like I said, cut down on the stress and save you a ton of money in interest, and high credit card payments every month.
That's good. Good information to know. So the next one is if something bad should happen, communicate with your creditors right away. How can this help?
So that's kind of a catchy one as well. A lot of times your creditors will work with you. There is a limit, however. Unfortunately, I haven't seen, um, until COVID. COVID has been a little bit of a different situation. So definitely during COVID, you want to reach out. Typically before COVID, um, if you went 30 days late, by law, they would still report you. They might work with you. They might keep your account open. They might even reduce your interest or your payments. But the credit reporting factor would still, be what it normally is. During COVID, I've seen a little bit of leniency on that, where you may be able to have some grace and some leniency on some of the credit reporting requirements during the COVID period. But it absolutely, varies from creditor to creditor. So there's no set, it's not a federal law or a state, legislative type thing. It just definitely varies from creditor to creditor on what they're willing to offer and what they might have in place, to help you when times get tough. But you always want to communicate. Always want to communicate. Student loans are one good example. I always tell people that's one of the best creditors that you can work with. Now they will actually work with you, um, till the wheels fall off. I don't know a better way to put it. They're actually a very good, creditor that will extend some grace and continue to work with you, bring you current. They have a lot of different and inexpensive ways to bring you out of default, and help you to, get those loans into some positive status. But again, some of your, like your Visa and your MasterCard, they may not have that many options, but you definitely want to make those calls and contact them and see what they might offer and what they might be willing to do.
So, for example, like if it's right now they have the rent moratorium, or some mortgage companies are working with the owners and things like that. They they can still report it on your credit while working with you.
Yes, yes. And
Okay.
typically that's what usually still happens. So I tell people, make sure you're educated. Yes, your mortgage may be, you might be working with a mortgage company or something, but the behind payments are still being reported. It's still showing up on your credit report that you're 30 or 60 or 90 days behind and that kind of thing. So, you want to be aware of that.
Wow, that's good information to know. That's really good information to know. So the next one is just resolve all credit disputes quickly. So although you may think you're in the right, if the dispute drags on and you don't make your payments, your rating can be hurt if the problem, even if there wasn't a problem. So as long as the payment's not being made, that's where it's impacting credit, right? So
Ab-
even if you're in the middle of a dispute, pay your bill.
yes, if you can. So the worst thing, and that's kind of a catch-22 too, especially if you really think you don't owe the money and you're trying to dispute it, and the dispute process can get pretty convoluted sometimes, and it's not really set up in the consumer's favor. um but as long as you have unpaid things sitting on your credit report, yes, it will continue to cause a detriment to your credit rating and your credit score. So the best thing you can do for your credit is to not have outstanding debt obligations sitting on there. So things that are unpaid, whether they're collections or past due or charge offs, um, and you have to weigh these things. Yes, there's going to come a time where things may fall off if you don't pay them. But again, are you going to need your credit? Are you going to be trying to get an apartment? Are you going to be trying to get a car loan? So the best thing you can do is to have nothing, even if you have to settle some of these things, which still shows up as a negative on your credit report if you pay something in a settlement. But it still looks better than having something just sitting there unpaid. Your credit kind of tells a story. And for people that are pulling your credit, it's like looking at someone who borrows money and doesn't pay it back, just to put it in the simplest terms. It's almost like if you had a friend and they borrowed $20 and they never paid you back, the next time they ask to borrow $20, you're kind of gonna maybe be thinking twice about loaning them that money again. So if
Mm-hmm.
someone sees that you have a history of borrowing money and not paying it back, that in itself could, even if you have a lot of things on your credit that you are paying and your credit score might be decent, um, for people to see that you have things that are just sitting there unpaid, it just kind of, it they look at it as collateral. It's the three C's: character, collateral, and oh goodness, it's Friday and I'm drawing a blank. Um, Character, collateral, and it'll come to me. But the
Yep.
I'm talking about now is character. So it's a character issue. It's, yes, do you pay, back? Do you keep your promises? Do you pay back what you said you were going to pay? So that is definitely huge.
Now, do you know of any creditors that give like second chances to people? Like, say, if you had, a bad history with them, you cleaned it up, got everything straight. Are there some, like you said, they'd look at your character, kind of like, when they're looking at your credit history or whatever. Are there some creditors out there that are known for second chances?
Absolutely. So, like, I think auto loans would be a good example of that. A lot of auto loans, your bigger auto loan banks, they kind of look at the credit that you have with them. So as long as you have managed your credit with them properly, they would be, more likely to extend you credit in the future. Some banking accounts are another example, like there's second chance bank account opportunities out there. If you've had some overdraft issues or, some problems at one bank, there are some banks that have second chance programs that will allow you to open up, accounts with some different type of rules attached to it that'll give you a second chance to kind of prove yourself and rebuild that character. Um, there's some different store credit cards that definitely, you may have had trouble with them, but then you've kind of gotten that together. You've made those payments. You've caught up. You're current now. Yeah, there's a lot of different creditors that would kind of give you that second chance. Absolutely.
And is that the same for like someone who has a bankruptcy? When they get to whatever that period is, are there also second chance opportunities even in that?
Oh, absolutely. I tell people there's life after bankruptcy. There is definitely life after bankruptcy. I'd say within 3 to 4 years after, even before your bankruptcy is even discharged. I mean, not before it's discharged, but before it falls off your credit. Within 3 to 4 years, you will start to get offers again for credit. Um, Now, you may have to prove yourself by doing things like maybe getting a secured credit card first, or you may have to deal with subprime credit card lenders like Capital One or First Premier that have higher interest, and um, they have those payments that you have to make in order to get the credit card. Don't count those out. Those are not, the most desirable, but if you're recovering from something like bankruptcy, I would say definitely consider those to get started. And if you're serious about rebuilding your credit, your character, and making on-time payments and reestablishing yourself as someone who pays their bills on time, it'll only be a temporary period where you have to deal with, the higher interest rate cards or the subprime cards. But you can definitely turn your situation around after a bankruptcy. Absolutely.
That's great. There's another question that came in regarding cash. So if someone has a lot of cash, but they don't have really good credit and they can just go kind of buy things, buy a car, buy a house or whatever, um, is that necessarily a bad thing? Or is that kind of like one or the other? Should you have, is it okay to have a lot of cash versus poor or no credit? Kind of
Well,
how do you go about, like, how do you think about that?
I guess I would say it would depend on how much cash we're talking about, because absolutely it's always good to have cash and not have to use credit or pay interest to buy things. But unfortunately, most of us are not in that situation where we can just take cash and go buy a car or a home. Um, so I would say if you have an exuberant amount of cash where you can just buy a home or buy a car, like celebrity status or something like that, um, then it's not a bad thing. And it's not a bad thing on the other hand either. The consideration is, if you're going to need credit despite having a lot of cash, you still want to build up your credit. So let's say, okay, I'm going to go buy a $60,000 car and I got $30,000 to put down. I could still be denied if my credit is really adverse, for getting financing for that other 30,000. Or I have 30,000 to put down on a home loan. I could still be denied even though I have a lot of cash if my credit doesn't look good enough for me to finance the rest of the amount that I need to finance. So the consideration is how much cash do you have? And even if you have cash, do I still need to finance something? If you're ever going to be financing something, then your credit is going to be coming into question. So you still want to, take a look at your credit and make sure your credit is in a positive status for that reason.
Okay, thank you so much. And then checking your credit report once a year. How does that help us to maintain or go forward with a good credit history? How does that help us build that credit history?
So again, that's the beginning of it. Knowing, number one is knowing what's on your credit. I joke with my clients a lot. I say, you don't want to go apply for credit and be sitting there sweating and wondering what's going to be on there just as much as the person who is pulling it. You want to get to a point where you're already confident. When you're going in to have your credit pull, you already know what's on it. You already know what the story says about you. Um, you know and and for that reason, you can avoid a lot of scams, and you can avoid a lot of being taken advantage of with interest rates. For example, you could have a credit score that could qualify you for a lower interest rate, but maybe a car lot or some other creditor gives you a higher interest rate than what your
Mhm.
credit score could actually speak to. And if you don't actually know that, then you could just be paying a lot more in interest than you actually have to. So knowing what's on your credit report by pulling it, and if you're going to pull it like from annual credit report, you get one from each bureau every year. Stagger them out. Pull one from one bureau in January, pull another one in April, another one in December, so that way all year you're kind of getting a picture of what's going on your credit. You're checking to make sure there's no fraudulent, or identity theft issues going on. No one's taking out any credit in your name. You're making sure that creditors are accurately reporting your payment history, and not reporting, incorrect late payments and things like that. There's not any collections on there that you're unaware of that could have a detriment impact on your credit. So absolutely pulling your credit, knowing what's on it, being educated about what's on it is number one.
Perfect. Now, I know the Financial Empowerment Center has a couple of different programs that some people may or may not know about. So, I do have a couple of the PDF documents, and I was going to share my screen and have you kind of talk
Okay.
about them. Um,
Absolutely.
Talk about them and how they can really, help us all. Oops. Okay. Hang on one second. Let me stop sharing real quick and get this up. Okay, so one, I don't, it's not going to share properly, but one is the personal loans,
Yes,
the auto loans, and then the what is that other one? The credit building ladder program.
yes, yes. So we offer a variety of really, really low interest rate products. I'll start out with the credit builder loan because that one is, it doesn't have any interest or any fees. That one is not necessarily designed to put a lot of money in your pocket, but it's used to strategically either establish a credit score if you don't have one, or boost your credit score if you need some help in that area. So the latter is 3 steps. It starts out at $100, it goes up to $300, and then the third step is $1,000. None of those loans have any interest or any fees. So it's a free way to borrow money. You pay it back at starting at $100. You pay that back at $16 a month over 6 months. The $300 you pay back at $18 over 8 months. And then the $1,000 you pay that back at about $21, I believe it is, somewhere around there, over 20 months. So this could give you actually close to 30 months of positive on time payment history. We report all of those payments to all three credit bureaus. So if you have some negative things going on your credit, or you don't even have a credit score established, this credit building ladder process can be a great way to establish a score and to combat some of the negative things that you may have on your credit for a no interest, no fee way to do that. And then, of course, we have some other things. We have a personal loan. It goes up to $5,000. It does have interest and very, very low fees. The interest is only about 9.9%, which is way lower than anything you'll find out there from, many of the financial institutions that'll give you a personal loan. Most of the time, you're going to be looking at 25 to even 35% on a personal loan from a bank or one of the mainstream financial institutions out there. So the personal loan is very low interest. The underwriting requirements are very low. They're not that stringent as they are at your typical bank or lending institution. The payments are about $129 a month. You can even use the personal loan to refinance maybe some higher interest credit that you might be into, or another higher interest personal loan that you might be into. And you can reduce, your monthly outgoing payments by doing something like that. Then, of course, we have the auto loan. Again, it's only 9.9%, which again is way lower than what you might find out there if you have challenged credit or no credit. Um, and then those payments, you'll do the calculation based on what you borrow for the auto loan, and at 9.9% interest, your payments are definitely going to be lower than most anything you'll find out there. And again, that auto loan can also be used to refinance, a current auto loan that you might be into that's at a much higher interest rate. And again, our lending institution that we partner with is called CEO. It's a faith-based organization, so they're really not in it to make a whole lot of money. And again, the requirements are not as stringent because they really want to help people in the community to establish and rebuild their credit standing with those products.
That's great. That's great. Well, we thank you for joining us today. And thank you for all of the in-depth information. I'm going to put the opt-out information back on the screen as well, and put the Financial Empowerment Center contact information on the screen as well. Your services are all free of charge, correct?
All free of charge. We're funded through the CARES Act, in response to COVID. So, yes, all of our services are absolutely free. You'll get hooked up with a financial coach. You can have as many sessions as you want. We work on things anywhere from budgeting, savings, credit, reducing your debt, building up your credit. We offer a lot of incentives, financial incentives for people just to get banked. If you don't have a traditional banking account and like say you're using money orders or check cashing places, we talk about getting you into the mainstream banking system, and we offer some financial incentives for that. Yeah, definitely write those numbers down or that email, sign up, and definitely come and check out our services.
Perfect. Well, we thank you so much for joining us today and for sharing this information on how to, kind of keep your credit at a good status, and how to build it up if you need that assistance as well.
Yes.
So thank you so much. Thank you to the FEC for partnering with us. Thank you, Marcia, for joining us today. Want to give everybody back their Friday, and have a good day. Have a good evening. Have a great weekend, everyone.
You too.
Bye.